Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hello, and welcome to this very special AI-generated price analysis. In today's weekly price analysis, we will cover Bitcoin, SNX, and Cosmos. But first, an update on the market and how it is performing. The crypto market has been battered by one storm after another in the last 2 weeks, beginning with the collapse of the crypto-friendly Silvergate Bank and continuing with the collapse of the startup-friendly Silicon Valley Bank last week. However, the large exposure of the USDC reserve in SVB exacerbated the situation for the crypto market, as USDC depegged by more than 10% following the bank's abrupt closure. However, necessary intervention by the Fed by announcing a liquidity backstop for depositors to arrest the contagion supported the crypto market and helped Circle to reinstate the dollar peg for USDC. Over the last 48 hours, the crypto market cap has risen from $912 billion to $1.13 trillion, showing strength in almost all the top coins. In the coming days, we expect the market to showcase a high level of volatility in crypto price as the market navigates the many uncertainties, and trading liquidity is likely to remain uneven. Now, let's move to the price analysis segment, starting with Bitcoin. On Tuesday night, the Bitcoin price topped 22 lakhs 48,000 rupees level, showcasing extreme strength in the counter. However, Bitcoin dropped back below the 21 lakh rupees level to test for support. Despite the uncertainties, bulls are aggressively defending the 200 EMA line on the daily charts, which has helped to spur a confidence rally in the market. The next major resistance for Bitcoin is at 23 lakhs 20,000 rupee level. On the Fibonacci retracement scale, major support is at 20 lakh rupees level, and if the price break below there, bears will strengthen their grip. To continue rising higher, RSI needs to go above its previous peak, and if it fails to go higher, the uptrend momentum will get weakened and may see a fall in Bitcoin price. The market is still extremely volatile, and we urge you to maintain the highest level of caution. Now, moving to the next coin, SNX, the native token of Synthetics Network. SNX is one of the few top crypto coins maintaining a bullish stance in the market at present. Year to date, the price of SNX tokens has more than doubled, and the uptrend momentum continues. The bullish trend is due to some important ecosystem developments like the Synthetics V3 deployment on mainnet, SCADA release in February that burn fees and reduce debt for stakers, and adding 22 new crypto coins to its perpetual futures market. On the daily charts, we can see that SNX has given a V-shaped recovery and is now trading close to its key resistance level of 275 rupees. The bulls were successful in defending the 200 EMA line, which is a positive development. Underneath, 240 rupee level is a strong support for SNX. If SNX is successful in breaking above 275 rupee level in today's session, it could reach the 290 rupee level and higher without much difficulty. However, keep a close eye on the RSI to check the momentum in the counter. The last coin in today's weekly price analysis is Atom, the native token of Cosmos. Atom looks impressive on the daily chart. Atom dropped below the 1000 level after encountering resistance at the 1250 rupee level but bounced higher after testing for support at the 61.8% level on the Fibonacci retracement scale, a key psychological level in trading. Atom has given a breakout above the 200 EMA line, which is very positive for the counter, and if, in today's session, Atom gives a breakout above the 1150 rupee level, we may see a continuance of the uptrend. Also, RSI is rising up from the oversold position, indicating a buildup of strength. On the weekly chart, we can see the formation of a cup and handle pattern, which is a bullish reversal pattern. That's all in today's weekly price analysis.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.